This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Syrian troops fighting U.S.-backed Kurdish-led forces seized the Omar oil field, the country's largest, and the Conoco gas field in the eastern Deir Zor province as allied Arab tribal forces advanced in the oil-rich area along the border with Iraq, officials and security sources said on Sunday. The takeover of the oil fields that lie east of the Euphrates River, a main source of revenue for the Kurdish-led forces, was a major blow to the group. Syrian government officials said the oil wealth the militia had controlled to sustain its self-administered region had deprived the state of much-needed resources.
Shipments of liquefied natural gas to China fell to a three-year low in 2025, official data showed on Sunday. China's 2025 ing imports fell 10.6% from the year before to 68.43 million metric tons, according to the General Administration of Customs. Total natural gas imports, which also include pipeline supplies, slid 2.8% year-on-year to 127.87 million tons, down from a record high of 131.69 million tons in 2024.
Moving on to the top news in the energy sector.
China has stopped imports of electric power supplies from Russia, Kommersant newspaper reported on Friday, citing sources familiar with the situation and high prices, while Russia said it was ready to resume sales and talks were taking place. Russia's energy ministry told Reuters the priority was to meet rising demand for power in Russia's Far East, but that it could resume supplies to China depending on the terms agreed. Russia could resume electricity exports to China if it receives a corresponding request from Beijing and if mutually beneficial cooperation terms are reached, it said. It did not clarify whether the decision to halt supply was led by China or Russia.
Canada and China struck an initial trade deal on Friday that will slash tariffs on electric vehicles and canola, as both nations promised to tear down trade barriers while forging new strategic ties during Prime Minister Mark Carney's visit. The first Canadian Prime Minister to visit China since 2017, Carney is seeking to rebuild ties with his country's second-largest trading partner after the United States following months of diplomatic efforts. Canada will initially allow in up to 49,000 Chinese electric vehicles at a tariff of 6.1% on most favored nation terms, Carney said after talks with Chinese leaders including President Xi Jinping. Next, we have the top news in metal markets. Copper prices hit a one-week low on Friday on profit-taking after a rally led by speculative funds, while demand from physical buyers in China was muted. Benchmark 3-month copper on the London Metal Exchange was down 2.5% at $12,780.50 a metric ton at 17:01 GMT, after hitting $12,696 for its lowest since January 9. The metal used widely in power and construction is down 5% since a record high of $13,407 on Wednesday. The securities regulator in top metals consumer China, meanwhile, vowed on Friday to crack down on excessive speculation after the country's benchmark stock index approached nearly 10-year highs this week.
Iron ore futures drifted lower on Friday as high prices and slim margins deterred buying in the biggest consumer China, with the Dalian iron ore contract reporting a weekly decline for the first time in 2 weeks. The most traded May iron ore contract on China's Dalian Commodity Exchange ended daytime trade 0.49% lower at 812 yuan, $116.55, a metric ton. The benchmark February iron ore contract on the Singapore exchange was 0.57% lower at $106.30 a ton as of 0800 GMT. The Singapore contract has so far fallen 1.8% on the week, while the Dalian contract was down 0.3% week on week.
We will now look at the top news in the agricultural sector.
U.S. corn futures rose 1.1% on Friday, pairing some of this week's steep declines, as exporters and domestic users stepped in to buy cash market grain at discounted prices, analysts said. Signs of export demand and short covering lifted wheat futures as well, and soybean futures followed the firm trend, underpinned by a robust domestic soy crushing pace. Canadian canola futures, meanwhile, climbed to a 6-week high after Ottawa announced a trade deal with Beijing that will cut Chinese tariffs on Canadian canola. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.